Joining us right now is Ben Narasin. He's Tenacity Venture Capital founder. Good morning to you. Let's talk about that. How important is how this all goes today in terms of what comes next?
I think it's absolutely critical. If SpaceX doesn't fly, you're going to see a huge stall for everything else, and it could put a true chill on the market. If it pops, everybody is just popping champagne and running to push their stuff out. We'll see a tremendous amount of IPOs, not just OpenAI and Anthropic, but a lot of other great companies.
Do you see a way in the short term for the company, for the stock not to pop? And the reason I ask that is, but the reason I ask is if you have these index funds, which in the next 5 days are going to be buying, rotating out of whatever they have to get cash to actually buy this. Walk through the permutations of how you see that.
So the two best reasons you won't see downward pressure are, one, the early listing in the major indexes and people's need to place those in their ETFs, et cetera. The other is the sort of fanboy, fangirl effect, and that includes people that I think are phenomenally intelligent, like Ron Barron, and obviously Blackstone announced today they're putting a $5 billion check in. But there is so much. This IPO basically rhymes with Facebook's. You know, Facebook had a visionary leader that everybody wanted to bank who insisted on a price. At that point, it was $100 billion. Elon's done the same thing. They did it without price discovery. The opening was delayed pretty significantly, and I suspect this one will be as well, as market makers tried to match. That offering did not do well for quite a while. It did come back. Look, I am a long-term buyer of SpaceX. I think it's going to be a phenomenal company. But there are so many systematic issues right now that I think are going to put pressure on this stock. I have no idea how many people that wanted allocations want them for a flip. You know, every banker tells you they're going to get you long-term holders. Our bankers told us the same thing. But then people are out there selling from the opening bell. So I think there's a lot that reminds me of what happened before, and I think there's a pretty good chance. I'd say at best it's a coin flip. It's not what the poly markets of the world are saying, but I think it's a coin flip whether this ends up or down.
Well, you just said you'd want to be a long-term holder. Does that mean that you plan to wait because you think there's going to be another opportunity to get it at a better price?
Absolutely. I mean, look, even if it holds today or pops, the lockup expiry, I know they have a staggered lockup and lots of different pieces to that. But in 6 months, when everybody gets released, woof, I don't see that being a great day. So that could be a great buying opportunity. Look, the people that are going to make really good money here are the long-term holders, the Buffett-style mindsets, the Ron Barons of the world, where they're going to buy and they're going to hold and they're not going to worry about the vicissitudes of the market. But the problem is I have no idea how the Robinhood bros of the world are going to handle this if it doesn't go well. If it trades down, it's going to turn into a pretty aggressive downward spiral, I would assume.
And do you think that's something that takes now not just IPOs more broadly, meaning the Anthropics and OpenAIs, but the broader market?
Well, I think it puts a pause on the IPOs that people are so excited about. We've talked about this before, where bankers are motivated by greed and fear. Now here, greed equaled, as we just heard, $500 million of fees, not too shabby. The fear is that if your clients lose money too many times, they don't buy your offerings anymore. And so if clients take a bath on this one, I'm not sure how quickly bankers are going to be willing to push out the next one. Whether the broader market takes a hit, I don't know. I mean, people, quote unquote, rotated out of tech to be able to have money to buy into SpaceX, or that was the theory. So maybe they move right back into it. There's no better category to invest in. I mean, it's not like you're going to say, oh, what's as good as tech? I don't know, oil and gas? No, tech's where the future is and where all the great growth is. These companies are phenomenal.
When you think about some of the incentives, alignments and misalignments in terms of how IPOs like this go today, and you look at the retail piece of it, the 20% instead of 30%, you had a lot of, we talked about BlackRock, taking a big piece of this. I imagine, when you take a big piece on one end, you're also hoping to get something on the other end. You had JPM and Morgan Stanley and Goldman Sachs. How should we try to understand sort of the behind the scenes of all this?
Well, another thing that gives me a lot of pause is the significant amount of retail exposure. Not just that it was made available to retail. I like that. I think it is very fair to give people the opportunity to participate in IPOs. In the old days, people would literally open multiple accounts with multiple. They would go to Goldman or whichever firm they could go to, and they'd open like 12 accounts, and they'd ask all of them for an allocation IPO because IPO would pop and they'd sell immediately. But I do like the idea of giving retail buyers the opportunity to buy in. What I find disheartening was when one of the major banks announced that they would drop the minimum threshold of assets from $500,000 down to $2,000. So all of a sudden you're basically saying, you know, as long as you've got two sticks you can rub together long enough to build a fire and then sell hot dogs for a week, you can be in the SpaceX IPO. That to me is a pretty dangerous thing, because I'm not convinced those are long-term holders. I think that it might be more motivated by what they perceive as a quick hit. And Tesla's had a great run for a long time, so you would assumedly see people from Tesla coming into this offering. But the retail component of this is something I think adds a level of variability that is pretty hard to predict. And you've seen that in the past, right? You've seen stocks, you've seen the meme stocks move like crazy off of pure retail.
Where do you land, though, then on, I mean, there's another retail element of it, but the NASDAQ and its decision to include this in the exchange, I mean, or in their index immediately, I imagine that means that Anthropic and an OpenAI would also have that opportunity.
Well, I mean, look, I think that one's pretty transparent. They needed to win the deal away from the New York Stock Exchange. I've done an IPO on the NASDAQ. I've done an IPO on the New York Stock Exchange. It's a lot more pomp and circumstance in the New York Stock Exchange. If you were just going for the building and the wonderful flair of the first day, it's a fascinating thing to do. But when they put you on the short, you know, on the NASDAQ 100, that helps. So that to me was just a pay to play. Whether the others will get it or not, it certainly breaks precedent and therefore makes it easier for the next person to negotiate for it. Same with the banking fees, right? These banking fees are a much smaller percentage than they usually get, but on an absolute amount of money, it's still stunningly huge. So look, once you do something for one person, it always becomes easier for the second person to insist.
Pay to play, that's typically not a great phrase. Are you surprised? We have not had a bigger conversation in terms of, from a regulatory perspective, about this new approach.
I mean, I don't know why it would percolate up to that level. When I say pay to play, it's negotiation. You're trying to win the deal. I mean, you know, that was one of the costs of getting this deal done. That's what they paid to get the deal done. That's what they paid to be the player that became the exchange that this trades on. And I don't see anything untoward about that. This is not a, you know, whatever. Remember in Trump 1, there was no, whatever it was, tit for tat. It's not, these are not backroom dealings. I mean, it's all out there.
I think, Ben, I think the question is, there's two constituencies in this case. There's the shareholders of the NASDAQ on one end, the shareholders of NASDAQ, not the index, on one end, that benefit by having this IPO on the exchange. And then there are the implications for price discovery and what ultimately happens to the investor and the investor class on the other, which has to do with the index. And serving both masters may not be the same thing.
Oh, they're totally different. So the price discovery, the absence of price discovery, is one of the #1 reasons I'm fearful this price doesn't hold, at least not for the near term. It probably comes back when it gets added to the index. But the shareholders of the NASDAQ should be super happy. You know, like when you take a company public, you pay a per share fee to the exchange you trade on. So this is an enormous revenue generator for NASDAQ. It's an enormous point of pride. This is going to be quite useful to them. So if I'm a shareholder in NASDAQ, I'm very happy. But that's a totally separate thing from being a shareholder in SpaceX and what happens from it.
Fair enough.